Now we're talking about RCL Foods. Remember, RC used to stand for Rainbow Chicken, RCL. But RCL Foods changed its name and commenced with an interesting process of corporatization by merging and acquiring the assets of Foodcorp, which was a unlisted entity which owned a bunch of milling and other businesses, but then also food brands like Yum Yum, Nola, Artspan, all that sort of stuff. It's the market leader in chicken in South Africa, though, because Rainbow was the largest player. Remember, it's also part of the Remgro group of companies. And then most recently, they took Remgro's interest in TSB, which was Transvaal Suiker Beperk, believe it or not, and gooid that in as well. So RCL Foods is now this kind of branded food group, and what the management team under Miles Daly is trying to do is get the market to kind of judge it and compare it to companies like Tiger and AVI and Pioneer. Anyway, market capitalization 13.8 billion rand, price to earnings ratio 6.83, dividend yield of 2.5%. So the combination of sugar, which has been tricky, and chicken, which has also been tricky, adds up into a branded food business now, which the market has sort of taken a bit of a mixed view of.
They're very diversified. I mean, they make everything from bobtail to dog food.
You're right. They're a huge. I didn't mention that in the intro. They're the largest because they've got dog, more, bobtail, and e-pol.
And they do e-pol, which is a lot. That's animal feed and stuff. So I think that's a very diversified group. PE ratio is relatively attractive. Dividend yield a bit worrying. I mean, it could be better, but I think that they've been under some pressure because of the drought, and that puts pressure on the sugar business especially, as well as pushing up the cost for chicken feed. However, being a chicken feed producer on the scale that they are, that gives them a bit of a fallback because they can get it for slightly cheaper than what their competitors can. Revenues grew by some 7%. Headline earnings per share was up 25% at their last earnings call. So it's been a good sort of run for them, I think.
Let's have a look at the share chart, because you must know here there's a process. When companies do a lot of corporate action and they pay off a lot of debt and then they issue a lot of shares and then they issue more in order to acquire something else, the market can't work out what the hell the earnings base is supposed to be, and accordingly you get a share chart that looks like that. But this can also be the source of opportunity, because if the market doesn't know what the earnings base is and you think you do, you can buy them, and then when in the fullness of time you get a re-rating. However, in this case, the uncertainty gave rise also to a period where earnings were a bit depressed because of the sugar thing not doing so well, and then the chicken thing got a bit mixed. There was a lot of
fear around the AGOA chicken thing, how much chicken is going to be imported, how much it's going to impact.
Because the imported chicken wasn't just the US you mentioned, it was also Brazil, which was a source of...
Correct, and European, or they're routing it through Europe to come down to us.
Okay, but now the question is, we've got to go hot or not. So you've got a 6.83 PE, which means that the market's expectations of future earnings are not great. It's low, actually.
Yes.
If you're right and chicken sales are expanding by 38%, then the market leader is going to benefit.
Correct. I think so. So this one I'm hot on.
Okay.
Maybe it's slightly riskier than what your call would be.
No, I mean, and also the branded food interests are interesting, because whilst I agree that consumers are under a bit of pressure, the fact is things like peanut butter and maize.
Yeah, well, they've got stuff like Yum Yum and Nola, you mentioned.
I said Outspan, but that's not right. I'm trying to talk about the grandma and her rusk company. What's that thing called?
Oma Rusks, yes, they've got Oma Rusks. And I'm loyal to Oma Rusks, so I'm going to eat Oma Rusks for the
But that's probably a tiny business. That's the one that's based in like Maltino in the Eastern Cape.
Look, to me it's huge because it has a lot of brand equity.
It probably contributes like half a cent.
They also have a variety of different maize meal brands, which is the staple food for, most of the continent.
And of course, they are tied critically to, I'm trying to see what this other thing was. No, it's tied critically to KFC, Nando's, Chicken Licken, and all of those guys, because they are by far the largest seller
suppliers to
those people, in addition to their own brands.
So I have to be hot.
You're going hot on this one. I'm going to go with you on that, because I like businesses in this space, and I think you're right. The valuations have slipped to a kind of a principally attractive level. Okay, good.